with the insight you need. From the financials and political capitals of the world to the heart of innovation, this is Opportunities to Consider with your host, author, speaker, and corporate strategist, Hunter Gaylor.
Lameness issues, joint pain, and osteoarthritis can be difficult to treat and debilitating for an animal's health and well-being. Take control of lameness issues and joint pain. Introducing Spring with OsteoCushion technology, a new intra-articular injectable veterinary medical device that goes beyond symptom management in horses and small animals to address the root cause of lameness issues and joint pain. When injected into a joint, Spring's naturally derived protein and carbohydrate components form a sterile, sponge-like, and shock-absorbing matrix that works with synovial fluid to mimic the protective form and function of healthy joint cartilage. Spring provides a scaffold that can protect the joint from further injury, unlike other conventional treatments that may only mask symptoms. Spring has provided potential long-term relief with just one injection. It has a demonstrated safety profile in animals with a track record of more than 5 years real-world experience in various joint types for horses and dogs. With just one injection, Spring with OsteoCushion technology targets the root cause of lameness issues, joint pain, and osteoarthritis, helping animals do what they do best.
Welcome to another edition of Markets Hunter. I'm your host, Hunter Gaylor, here hunting the opportunities to consider. We're very excited to bring a very special guest in today, where we're going to be talking about Spring. You saw the commercial a little earlier when we just started the program. And we're actually going to bring in right now Joseph Salvani. He is a market analyst. Joseph, thank you for joining Markets Hunter's CEO Talk today.
For inviting me.
No, thank you for being here. So, Joe, I really kind of want to just step right into the questions here. You're an industry veteran on Wall Street. Talk to us a little bit about your background. Let us get an idea for your experience and lead into why this is exciting and why you're excited about this particular company.
Sure. Into this business in 1981, I was the senior chemical analyst at Goldman Sachs, 6 years. And then after that, it went on to become the third largest partners, which most people didn't know about hedge funds at the time, but it was the second largest. In both using those skills, I was able to concentrate on chemicals, and animal health was an important component of almost all the companies that were had given that background. And in addition to that, I got to meet John Lai when he was with, we got both involved at a company called Stratus, the rapid prototyping company. But I found that company probably not trading and was able to help get people to understand that company, $2 to $25. And, it was an instrumental in the early years development. So John remembered me, and John, basically is the CEO of PetVivo, and he came to me and he said, "Look, Joe," he goes, I would love for you to, I think I have no holes. I'm on NASDAQ. My market cap is ridiculously low. I understand this company." And so that give him the background of understanding, how a leverage of a medical device that's similar to a drug, knowing the size, understanding chemical compounds and understanding the science, made this a natural for me to take.
So, given your background, Joe, can you talk about what made this so exciting for you as opposed to any of the other companies you could potentially be working with?
The compound is made in human grade compliance background. The second thing is it comes from a phase study done in humans, which then enabled and was classified by the FDA medical device. That enabled John to actually raise the money to take this company public and to go right away into the animal health market. Because anything that's classified as a device, it was automatically classified as a veterinarian medical device. They developed the manufacturing to do the studies, and they launched the product in October of 21. But obviously they didn't have the full sales and everything. So just about a year later, they were able to get there in the animal health business to market them. So what intrigued me about this is going after osteoarthritis, and because it's different than the markets that are out there. Hyaluronic acid is injected into your cartilage, or that's like putting air in a balloon with a hole. It leaks out, and you got to do it again and again and again, and the hole keeps. They give non-steroidal anti-inflammatories to try and get rid of the pain, degrades the joint, degrades the cartilage, and causes problems. What Spring does gets injected. It's a combination of collagen from bovine, and heparin, which comes from pigs, and that combination creates a matrix that they have found actually does become at the same time acts like the hyaluronic acid. So you don't need the hyaluronic acid. So it's very big. There was a company I followed years ago, made a lot of money on, called Biometric. Excuse me. They became the king of hyaluronic acid. They have a thing called Synvisc 1, which in 2017 is the last time I could see the results in a year for humans, and then got adapted to be used. There is nothing that cures lameness or attempts to alleviate this or arthritis, or actually what they're finding is also, in a sense, seal, which is not, they haven't done the study for yet, but they're seeing evidence of that. So what you find has tremendous impact. So let's go over the numbers. There are 14 million percent are performance horses. The other 70 are pets. There's nothing horses really want to make sure their horses work. There's been gigantic evidence. All of a sudden, within a week or so, it's galloping and winning races. Interestingly enough, as of the beginning of this year, the Racing Association, based on polyacrylamide or non-natural products, derived medical, a veterinarian that basically, when injected, allows the horse to have longer, better performance. And from a pet owner standpoint, it's a home run. The next thing is there are 60 dogs. On March 15th, they're having a major study come out that they paid for. They wouldn't be being given in a peer-reviewed meeting if it wasn't good. It'd be excellent to show that basically about 20 million of those dogs have osteoarthritis. So just think about that. What are the odds of something that could actually help your dog turn back the clock? You see him running around playing with younger dogs, or I see him, her running around playing with. People have a tendency, especially when it comes to small animals, of really doing even more sometimes. So your choice of a lame dog is spending $200 to $300 to unfortunately put $1,000 on a knee surgery or elbow surgery, or spending $600 because your vet recommended that you should do this, and the dog stays a year, but it lasts longer. There are also going to be a feline study that MWI is the largest, and they basically have over 4,000 locations, and they're really, but now once the dog study comes out, so what are the odds when you add up 10 million horses, say 65 million dogs and cats, you maybe call well over 120 million U.S. animals that basically have about true arthritis, that this company over the next 2 years, with no major competition, able to get at least to a rate of 1 million injections a year. This is a well over $200 million product for them. But
So, Joe,
80 to 90%
on that, and I think that's a good segue into my next question here, which I'd like to get a market analyst perspective on this, because we talk with a lot of the management of companies, and last time I spoke with the leadership at PetVivo, one of their gentlemen that we spoke with was their national sales director by the name of Mark Middleton. From your professional opinion and your analysis, what is the real opportunity for this product in the animal world, given everything that you've said? But what about the company's distribution partner, Amerisource Bergens, their MWI unit? What's your professional opinion on what that means for the company?
Well, they are the 10,000-pound gorilla inside of animal health. They cover all the vets and nationwide. They just reached a national group that just is big, which is going to be interesting, because the company has the ability to do 125 million out of their plant at their which I'd be shocked that they don't blow out of that and reach that capacity. And so, that's all because MWI is so strong. MWI, the synthetic product, which is polyacrylamide based, the plastic product, about 10% of the time gets sealed off by the immune system, causing the performance horses at all, or in your dog. You don't see that side of this product. In addition, this improves the cartilage and improves the ligament. I think on the conference call recently, a woman called up and said her father was a major. They had a horse that had a ballooned ankle, and within days, she said, okay, I know it usually takes a week or so, but in days it was races, in which it never did before. So this is the type of anecdotal that are making its way onto social media. The same thing with dogs. There was a doctor that had a dog that all of a sudden was running around again, and this is a educated physician who doesn't know it, but he did everything possible for his dog, and he said it was amazing. That they have is that a 11-year-old lab got a young pup for it to play with, and it wasn't playing with it. They injected it, and all of a sudden the pup. If this is the type of stuff that's going to come out of this stuff, it is. MWI is going to make this a big product. Like I said, if they don't at least reach in a couple of years 1 million injections a year between the horses, more realistically, that's out of more realistically, 1 million at its peak. And if it does 3 to 4 million at its peak, you're talking $500 million make. Now let's just put the margins on this. At 100 million, the margins of this company could be making $8 to $9 a share. If it's a couple of hundred, if it's more than that, you're talking 30 or 40. Yes, it's a wild out. But the fact of the matter is, looking at something that could be significantly bigger any other veterinarian product we have out there. And the company with 10.6 million shares. So at 10.6 million shares, the earnings leverage from this one product, and the company has another 11 to 12 other products, urinary incontinence product, which I believe could be almost as big. This product has been made and had a phase 2 designation. There's an element of a human side to this that they're not going to go into, but it's somebody else. We try to do this in humans because realistically, as you get more dog treatments, feline treatments, this is basically a real live, real world, because it works almost the exact same way in humans. And
well, I think that leads to my next question, Joe. Is that this product started, as you mentioned earlier on in the conversation, as a human product with the derma fillers, and one of the you had spoke earlier that you were one of the founding investors or one of the founding investors in Medicis. Can you explain the potential human aspect for this type, as you were just starting to allude to, and what that means for the potential growth of the company?
Yes, I mean, I was one of the original investors. I created it, and I helped raise the initial money. And I would say about Jonah came along and was able to get the rights to Restylane. Restylane became in the dermal filler area. This product initially was being studied at the University of Ford as a dermal filler. It actually did 136 patients. And did that, and would probably be better dermal filler. That enables us not go into dermal filler, but to continue, not the company, but if they created them and they cut a deal with them to do the studies, say around 5 million, they can get a PMA done, osteoarthritic market, which would do the exact same thing. And there you're talking the number really big. You're talking just the replacement of synthetic lubrication in knees is an 11 billion. So there is zero value being put upon this product for humans. They should be buying it for that. They should be buying it because this thing could be a well over 200 more in the animal health just from spring alone, not to count all the other products they have.
So I think that's a very good lead into my question. One of the products that they have that we showed the commercial before we started and you joined the segment is the spring product. And for all of our viewers, we have some information scrolling on the bottom about the spring product. But given what you have forecasted for spring earlier on in the conversation, what are the potentials for other products, and where do you see the stock in, say, 6 months, 1 month, 2 years? Eventually, does it get sold before that? Give us your professional opinion on where you see the company going from a market analyst perspective.
Well, what I like about this company is that the CEO and management have kept the share base. There's only 10.6 million shares out. It's probably only 7 million. There's only about inside DTC, or maybe between 6 and 7 million, and term investors that know the company. If Spring does what I anticipated to do, the market begins to focus that it could do 100 million in revenue, say by the middle to the end of 2025. It's going to start discounting $10+ a share or more and put a 20, 30 multiple on it. So it could easily be $200 to $300 a share, literally within a year out. If they focus on the true dominance market. And why is that? Because they have the number one distributor. They're the only one out. You're dealing with social media, which once people start telling people about, wow, what's going to happen is they're going to start going to the vet. The only reason why I wouldn't be is because most small animal vets don't do injections. It's going to take some education to get them to do it. It takes 2 to 3 years. It doesn't matter. No one else is coming at them. So the advantage, there's going to be some recognition by some very big funds on a company that's on NASDAQ at less than a $35 million market cap, or just about a $35 million market cap. And at some point in the next 2 years, well over $10 a share. And it has no holding cases. Even it only needs a small amount of money over the next couple of quarters, and what they need to get there. They don't need it for manufacturing. They just need it to support very good distribution. And they have 7 clinical trials they pay next year and a quarter, which are only going to help MWI sell into the, and as well as many other parts of that market beside. And then the urinary incontinence product, I think, could be next year. And then he's got a whole bunch of other ones. So, and at some point, at the end of the year, someone's going to recognize that this has value in humans. And when that does, you're going to get up.
So obviously there is tremendous things to expect from the company. We've put their stock symbol down below. It's PETV. You can also go to PetVivo. You can follow their company along. I really encourage people to do that. Also, if you go to marketshunter.com and you click the PetVivo portfolio, you can go and see their entire profile page. And we look forward to having Joe back for more analyst coverage. Is there anything you want to add? Absolutely. Please go ahead.
Yeah. So recently came out, you saw a tremendous amount of insider buying by the board directors. Gave up his salary and to get stock, which helps increase the cash. All right. And that's very important. So you remember it in the rule. In the worst case, they can't sell for 6 months and make a profit, because all the profit then goes to the company a long time. And they have been anyway. But the fact that they're buying here tells you they actually believe that this product is going to be a monster product. I actually think component. The other thing is, I believe that there is what I call a sleeping short, and like most of these small cap NASDAQs got destroyed. It wasn't making money when the Fed raises interest rates 4 to 5%. Whereas Kathy Wood said today, when it rises in history, all right, stocks come down. Most of the time, Dell and other companies go more, and the market makers go short. They stay short. So I built up short in this, that basically maybe out of the 7 million, close to 7 million share, naked short. And, I think once the stock, which it's trying very hard to do, the company's been hitting 52-week highs over the last. Once it does that, this thing could easily run to the 5 to 6 range. But the company's got about that publicly trade. But I think it's going to blow right through that. And so, I've been in a lousy market environment. This is one of those unique companies that, because of earnings and the fact that there is zero investment holes, and it's so far behind its market, become one of the biggest winners on NASDAQ this year.
Well, and I think that's very interesting. This definitely, in my book, from the Markets Hunter perspective, is a buy and hold for the long term because of the amount of innovations coming out from the company. And based on your analyst coverage, I think it's clear. Where can people go for more information on the company outside of their website? Should you encourage them to be looking at the filings and the fundamentals?
Yeah, well, the website does a great job of pulling everything together. John, is coming up with one of the better informative websites. Matter of fact, today, I think an analyst recommendation, which I thought was a pretty very well thought up analytical report. I'm sure John will probably put it on I don't know if it's on there, but it will be on his site shortly. Looking up, a lot of the videos, taking a look at what the owners of the animals, because the animals can't talk. You can only move. And that's very important. And I think, the feline would be very informative, because I don't think there's been very much for osteoarthritis. You spend about $150 a month to give to it, because cats, they just you can hard to tell if a cat has got arthritis, but you begin to tell the difference like spring. So as word gets around to the younger the pets, an organically derived product versus or non-steroidal anti-inflammatories, this thing is going to take off big time. The other thing you should realize is that in the polyacrylamide area, which is it's imported from Russia, one of them. So that's another problem. I think that this is made in Minnesota, and that's a very, very important thing, especially in today. Resourcing back in the U.S. His plant is in the U.S. This is a U.S. product.
Well, yeah, I think that's definitely made in the USA is a clear winner for this particular thing, especially when people are very concerned about the health and well-being of pets, which I can tell you in our family, pets are family members. So, we look at them just as the way we look at other members of our family. So that's very important. Also, with regards to the market report, I will say to all the viewers here, we will put a link to that on our social media channels. And we will put that link to the PDF report that did come out. We are familiar with what Joe is talking about here. And so, Joe, thank you so much for joining us. Do you have any final comments you'd like to make?
I think that this is going to be the winner on NASDAQ this year. I really do.
Well, there you go.
Next couple of years,
you heard it here from a market analyst that understands the space. He understands, obviously, given his background. So, once again, this will be posted and this streams across all platforms from LinkedIn to Twitter to YouTube. It stays up. This is evergreen content, so you can come back and watch this and rewatch it to make sure you have your notes and everything that you need as an informed investor. Joe, thank you so much for joining the program, and we look forward to having you back on potentially talking about some of the other companies that we have here on Markets Hunter.
Thank you, Hunter.
Thank you.
Thank you, everybody.
Be well.
Bye.